Good evening, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys had a very nice weekend so far. And in terms of the top 5 options plays, they will all be for selling options, more specifically for selling put options as part of the larger wheel strategy that I like to run on the channel. It's a very easy strategy to run, guys, whether you are a beginner, intermediate, or even advanced investor. It's the strategy that you guys saw me run in 2023 when we made over 75% annualized ROI that year. Last year, 2024, we made 65% annualized as well. And this year so far, in the middle of February, we're already up to 13% ROI, largely beating out the benchmark indexes. It is a low risk strategy, somewhat conservative as well, and does not require a lot of time management either, with a relatively high win rate too. And it's the strategy that I prefer. As you guys can see right now, currently traveling the world across Asia right now. You saw me in Japan last week. We are currently in Thailand. Let me just raise it up here so you guys can see behind me. Very nice place here in Thailand as well. And just when you don't want to put in that much time on the charts and you only have maybe 30 minutes per day, it is the strategy that I prefer. So in today's video, we're going to be going over a few key things together. Number one, the expectations for the week. What do we have in terms of either earnings or macroeconomic data points to look out for that could possibly influence the markets in either direction? Number two, we're going to be going over some of the strategy rules that I love to look for when selling put options to open into the market. And thereafter, guys, of course, we're going to get into the top 5 options plays of the week. And as per usual, I do have a ton of bonus plays for you, so make sure you stick around to the end. So without further ado, guys, let's jump right into the action, shall we? So in terms of the expectations for the week, so last week we actually had a very nice week closing at the highs at the SPY, but still not breaking out of the all-time highs. One that did, though, was the QQQs. QQQs clearly gaining a level, and we do have a very beautiful daily uptrend underway on the Qs. Now, not all of the big tech names are participating, some of which are still lagging behind, and those are going to be subject to the top 5 options plays of today. But overall, guys, I cannot say there's any major red flags in the market right now. If you look at the futures chart on the SPY, which paints the clearest picture, you can see a very clearly obvious bull flag formation breaking out to the highs, and the bulls do really look like they want to go to gain a level to the upside. The technicals are looking fairly good. Whether you look at it on the daily chart, even the weekly chart, we have a clear weekly breakout pattern here, concluding our weekly trend change back to the bulls. Now on the normal SPY chart, still have not broken out, but if we do break out this week, it will be a confirmed weekly uptrend, and just for some pure monthly continuation of this gorgeous monthly uptrending chart. So overall, on the technicals, I would not say we have any red flags, and as a matter of fact, if we do have any form of pullback this week, we have a very beautiful level of support below us, 600 down to about 595 on the SPY, so tons of space for the bulls to kind of back down, find some more support, and try to go for those all-time highs again, in the event we do not run right into them to start off the early portion of the week. And on the QQQs for the tech stocks, they have already broken out. They are your lead bull right now in the markets. Clear daily uptrend. This is one of my favorite patterns as well. We might be looking for a breakout of the highs, retest of the highs, and possibly run. Now, it's a big thing because we've been consolidating trapped below this range of resistance now, guys, for about almost close to 2 months. So it is a very important level that we have just claimed, actually the bulls have claimed. So looking for a maybe breakout, retest, and run, which is why if I possibly see some early weakness to start off the week, I will be buying because now the bulls have this area and can use it as support to possibly get some extra juice lined up to the upside. So in terms of the technicals, at least, not too worrying, no major red flags in my opinion. The daily and the weeklies do look quite good for some bullish expansion to the upside. Now, in terms of do we have any big things to look out in terms of macro events? Well, not really. This week is a fairly light week on that front as well. A few Fed members speaking here on the Monday through Tuesday sessions. Monday is actually closed, as a matter of fact. So starting Tuesday, the markets don't really have much this week, guys. We have on Wednesday the FOMC minutes. That's just a recap of the FOMC that we had with Jerome Powell just a few short weeks ago. Should not be expecting any major surprises there whatsoever. On Thursday, also not much action. And on the Friday session, we have a manufacturing PMI report, but I don't think that that is going to move the markets as much as it has in the past either. So this week should be pretty much smooth sailing, shortened trading week, of course, starting on the Tuesday session, so keep that in mind. Now, in terms of earnings, conversely, as we can see here, there's no major ones, no big tech names, no Nvidia. That's actually next week moving forward. This week largely is going to be a lot of the smaller companies, none of which can truly impact the markets in a very large way. So I think that this week, other than, contrary to the weeks we've had in the past, we do not have that many big market catalysts, nor on earnings, nor on the macroeconomic data release front. The only thing that you could possibly look out for is more tariffs from the Trump administration. He did obviously start the tax process last week of throwing taxation on different companies that were taxing the US. So talking about the reciprocal taxes, but so far, no new major tariff announcements from the administration. But we know that those news catalysts have been the ones that are moving the markets the most. So pay special attention. If that does come out at the midpoint this week or anytime this week, that could be a very volatile day in the markets. But overall, guys, this week, I would not be surprised if it's a more normalized week in terms of volatility than we've seen at least over the past 7-8 weeks, which have been very volatile to say the least. So that is your expectation for the week, guys. Hopefully you enjoyed that short introduction. Now let's dive into these strategy rules. And I'll be going over these extremely quickly, guys. I'll leave a link in the description. I have a full set of full video, 30-minute video, explaining the rules of the strategy in detail. I'll leave it down below. If you don't want to watch the 30-minute video, I'll leave also a link to a 10-minute refresher. I used to do these videos, well, I still do these videos every Sunday, but I used to spend 10, 12 minutes on these rules per video. It's a bit too much, so I will refer you to those 10, 12-minute recaps. I'll link one of those videos down below, linked exactly to the time when the rules start, because now it's just going to be a very quick refresher, guys. Going to try to keep these videos shorter to optimize for the YouTube algorithm, so hopefully you guys can understand. So here are the rules. Take a snapshot if you have not seen them before. As I said, 2 links down below to get yourself more familiar with. But for those of you who are getting familiar with them, here's a quick refresher. Number 1, we want to build a watch list and filter for red. We are only going shopping to write puts to open, short puts, guys, under the market. So we want to be looking for stocks that are red. Now, what exactly is selling puts? Very easy, guys. It's just think of it as a buy limit order that pays you. Let's say you want to buy Google under the market around the $180 mark, but you're not too sure if it's going to get there by Friday. Well, there's 2 ways you can do it. You can either set a buy limit order here at 180, but if the market just runs away, well, you don't get the shares and you also don't get any money for that limit order, right? That is where a short put comes in. It is literally a buy limit order for 100 shares under the market. Now, if Google drops below 180 and closes below 180 by the Friday session at the close, well, you will have to buy 100 shares, but you always get compensated with that premium. Now, if the market closes above 180 on the Friday session, you will get the premium and not have to buy the shares. That's it, that's all. As you can see right here on this options chain for Google, there's not that much premium there right now, but for a theoretical example, right, you would collect right here $40. The 182.50s would be paying $77, aka 77 cents per share. If Google does not close below there on the Friday, you just get to keep all this money in your pocket. If it does go below there, you have to buy 100 shares of Google, but you also get a rebate of 77 cents per share, right? So just think of it as a buy limit order that pays you. Extremely, extremely simple stuff here, guys, right? So moving into the rest of the rules here, let me just pull them up again. Into the rest of the rules, you want to build a watch list and filter for red. We're always looking to go shopping in the markets to the downside, right? Number 1, high quality, high conviction companies only, guys. This is literally where 95% of people who run this strategy, this is where they get it wrong. They are not trading high quality or high conviction companies for them. And then when they get assigned shares and the stock goes down, then they start to panic and wonder what to do with the position. It's much easier holding a bag of Microsoft or Google than it is holding a bag of some small cap stock that you know little to nothing about. So keep it to high quality, high conviction companies only, and you should be able to manage every position just fine. Number 2, all the rest of the rules, guys, are going to ensure that we have low risk of assignment. It's a very high win rate strategy. You want to minimize your risk of being assigned. Now, number 2, monthly uptrends or long-term ranges. All the plays will be in one of these 2. Number 3, no earnings this week. This is a big one, guys. You know stocks can move an absolute ton on earnings. So if you want to avoid any large losses and any nasty surprises, just do not write any short puts ever on companies that have earnings this week. Number 4, everything will respect technically a support area or a zone of breakout retest. The breakout retest is literally what I was just showing you guys on the QQQs, right? On the US futures here. Breakout, retest, and run, otherwise known as the trend continuation trade. Very high probability setup as well. And now thereafter, taking a look at the rest of the rules here, we want to be writing at or lower than the expected move. If you don't know what the expected move of a stock is in a given week, it's what Wall Street thinks the stock is going to do by the Friday close. You can go to barchart.com, this website, just type it into Google. Bar chart, Google, expected move, whatever stock you want, you'll come to this page. You always want to be writing options below this expected move to put all the odds in your favor of not being assigned. Number 6, we want to be writing on a red or flat day. Stands to argue if we're looking to write below an expected move. If the stock blasts off Monday or Tuesday, well, then obviously we cannot find any premium below the lower range of the expected move. So always look for stocks that are red so you can get it lower than the expected move. Before last year, want to be writing stocks. This is our ROI, our take-home pay. How much are we going to make from these contracts, right? 0.5% to 0.75% per week. After running this strategy very successfully for the last 6-7 years at this point, guys, this is the sweet spot. It is the spot where you still make a decent amount of money. 0.5% is 26% annualized, no compounding and no covered calls. That is just a flat rate. Very good. That's 2.5 times the average benchmark performance of the S&P on a yearly basis. So we want to be looking for 0.5 to 0.75% in weekly premium. What does that mean? Well, you can just look at this options chain here at a very quick glance. You want to see half of the strike price in cent increments. That is how you know it's paying 0.5%. So if I'm looking at the Google 180s and I want to know, is it respecting the 0.5% rule? You need to see half of 180, which is 90, on the bid. As you can see right here, 0.39 is not enough money at all. I'll show you though, if it did say 0.9, right, and you like the level, 0.9 divided by 180, that is 0.5%, 0.0005. You're always looking for 0.005, guys. Do not get too greedy. Do not go too close to the current price because your risk of assignment is too high, and do not go too far away because then you're not getting paid enough money. You want to try and keep it between 0.5% and 0.75%. And with all the examples I'll show you, it'll make a lot more sense. And lastly, we put a take profit at 90% of the contract value, just making sure we're being capital efficient, right? If we write these on Monday or Tuesday morning, and by Wednesday morning or Wednesday afternoon, they are already 90% profitable, why would we keep them into Friday, guys? You may as well just close the trade and go shopping for a new trade. Make sure you're making the best use of your capital in terms of ROI optimization. Lastly, if we get assigned, we're going to write covered calls. Covered calls should respect the same rules, 0.5% to 1% in weekly premium. And we want to write covered calls at the assigned strike price or one strike higher. Short puts are possibly to get into a stock. If we are then in, we use covered calls to get out of the position. All while we are in, or before we're in the position, we are farming premium. That's what this side does, the short put side does, and the covered call side, that's what they do as well. So that is a rundown, guys, quickly of these strategy rules. Hopefully you guys appreciated that. Now let's dive right into the top 5 options plays. And we're going to start off with one that we just talked about, which is going to be Google. So Google, I absolutely love Google for a few reasons, but number one has to be valuation. Valuation is outstanding at a 1.43 peg right now. It's actually lower because we did it at 193 and Google is about 186 right now. They're growing revenue and EPS very healthily. They have record net margin profitability, 30% year-over-year cloud growth, and the future does look extremely bright for Google. That being said, they are also coming into a very juicy technical level, which is the 180 to 175 location. Looks decent on the weekly, but when you understand what they're doing on the monthly, guys, this is just looking for a monthly higher low for possible further trend continuation, and that area of confluence, this horizontal support 180 to 175, is also the 12 monthly EMA, which the bulls have not lost now at this point for almost 2 years. So always a decent proposition to be buying Google in technical confluence and also at a great fundamental value. That being said, the expected move for the week is 180.84 on Google. Let us go shopping. Can we find anything? Well, as we can see already, guys, the 180s are not paying enough money. Arguably, the 182s are still not paying enough money. You would need to see half of this in cent increments, which would be 90 cents. So far, we are only getting 77. So not quite there. Essentially, what I'm saying is we need Google to drop a little bit early on in the week if we want to have any chance of getting under the expected move of 180.84. Right? Let me just double check this I'm sure I got the expected move down correctly, but that seems a little bit low. I just want to double check myself before I lead you guys into, no, it is 180.84. Okay, so there you go. Oh no, that's the 228. My bad, guys. This week actually is one 82.94. There it is. Sorry about that, guys. Got to move it up. I thought it was a bit low. I've been doing these, not too bad for my first day of trading options, right? Sorry about that, guys. We're doing this raw, right? You guys know I don't edit my videos. We're going through all these as if it was like a live stream or a podcast, right? Just showing you guys how I look at the charts real quick. So expected move is 182.94. So under that expected move, we would be finding, 0.77 cents here at 182.50. It's just a little bit short. You want to see 90 cents. So that means that if we find Google here on the Monday session on a little bit of a dip here on the daily chart, that will be an opportunity to go shopping. Now, if Google somehow opens on a red day 1 or 2%, well, then you might be able to even get the premium at the 180s. Be dynamic with your strike, guys. In other words, you want to be going as low as possible on this chain while still getting 0.5% while being in the area of support, which is 180 to 175. So at a first glance, guys, the 182s on a little dip, not too bad. But my favorite strikes is the 180s. But for that, I'll remind you, we need some declines on Google this week to get those contracts to be live. If you don't have enough money for Google, you can always make an attempt at the 2 times leverage version of this ETF, GGLL, but do not play this one too close. It is 2 times leverage, guys, right? So they have an expiry coming up this Friday. They only trade monthly contracts. I already have one down here at the $41 strike and $40 strike as well. Those are not too bad, guys. If Google comes down there, that is the equivalent to actual big Google being at 180, 178. So on the GGLL, not too bad, $41, $40 if you can get it. I'll remind you, for this one, you'd be looking for about 25 cents on the bid for those contracts. That is play number 1. Play number 2 is going to be another very strong big tech company that has been lagging, but I think is about to go on a little bit of a rally. And that is, of course, Microsoft. Microsoft, needs no introduction, right? The company's fundamentals are absolutely fantastic. We went over their Q4 earnings and they were very, very, very good. You're talking about a 3 trillion company growing double-digit revenue and EPS. Extremely solid, guys. Okay free cash flow yield. The valuation is relatively at historical averages. It's not cheap. It's not expensive. Microsoft usually does trade a little bit more rich because they're such a consistent company, right? You look at this long-term chart, so consistent. And that is because of how consistent the revenue and EPS expansion is all the time, right? We look at this revenue and EPS charts. It's very smooth up and to the right. No blips whatsoever, regardless of what the economy is doing, regardless of what Trump's tariffs are doing. It's just a very solid company and one of my favorite companies in the entire market. That being said, we are also in confluence with very large technical support. This is now, at this point, guys, over a year's worth of support. So the bulls are playing strong defense down there. So I'm a big fan of playing short puts in this lower area as close as possible down here at about $400. But I'm not too sure we're going to get it. So let's check the expected move of Microsoft. I think, guys, I think I made an oopsie on Microsoft when I did the expected moves earlier as well. I went with the line on the graph, but yeah, this is also February 28th. So I'm going to get you ones for this week, actually, is the expected move 401.87. So let me just move this one up, 401.87. Let me type it in real quick. My bad, guys. 401.87. I think the chart is wrong because this is like a shortened trading week and they didn't put it on the chart real quick. So the expected move is 402, let's call it. Let's go shopping together on Microsoft, see if we can find anything lower than that. Now, before you move away from this chart and say, well, I don't have $40,000 to write a short put on Microsoft, I'll show you how we can use another 2 times leverage ETF to play this one for a lot cheaper. And I'm also in both of these trades, the big ones and the small ones. So there is something for everybody here. So moving on in, 401.87. Can we find anything at 402 on the chain? Let's go have a look here for Friday. As we can see here at 402.50, decent, guys, decent, right? It's not quite below the expected move, but it's very close. I'm willing to make an exception for Microsoft because it's such a high quality company. It is in deep support of the last 1 year, and it's below the 200 daily moving average as well. I really don't care buying Microsoft at $400, guys. I think it's a very decent price, all things considered. So the 402.50s, although you should be seeing half a percent, half of 400 roughly is about 2, right? Half of 400 is 200, so you need to see $2 on the bid right here. It's not quite there. I would allow it, even though it's slightly under our ROI required minimums, just because of how high quality of a company it is, and that I would not mind being assigned the shares. 402.50s, decent. But if Microsoft has another little red morning, as it has had over the course of the past few weeks, comes down into 407, 406, 405, well, that's going to give you a lot more premium on the 402.5s, but maybe even free up the 400s or even the 397.50s. Be dynamic, guys. If Microsoft drops, just look for 0.5%, as close as you can find to 0.5% and as low as a strike as possible. Now, in the event you do not have the required money to play the big Microsoft, you can always play MSFU. So, quick little tidbit right here, guys. If you see an expected move on Microsoft, right here, you see the expected move is 1.61%, yeah? So Microsoft MSFU is 2 times leverage, meaning the expected move will be 2 times big Microsoft's expected move. So you can expect this one to go down about, let's call it 3.6%. So if you look at where is 3.6%, it is roughly about $34.89. Let's call it $35, $34. So that is where I would be shopping for MSFU. Matter of fact, those are actually the strikes that I do have myself personally for this Friday. 35 and 34 on MSFU, I do not think is that risky of a proposition. Even if it's a 2 times leverage ETF, guys, you know, it's not as if it's on some random small cap company, right? It is Microsoft. The average daily range that Microsoft moves per day is like 0.5%, 0.7, 0.8%. So it doesn't move as fast as Tesla. It doesn't move as fast as Palantir. You know, Microsoft is kind of more of a defensive play, which is why for Microsoft and for Google, I'm not opposed to playing the 2 times leverage ETFs to run the wheel strategy. If you just don't want to put, you know, if you don't have the amount of capital required to take the big ones, but I figured I should show it to you anyways. So that is going to be play number 2. Now for play number 3, we're going to take a look at another very strong company, guys, another big tech company. It's going to be Amazon, right? There's so many plays in the market, but when they're giving us gifts on big tech, you may as well just play big tech, right? So Amazon coming down into here into first level of defense support, but the actual level that I want it, guys, is down here at about 220, 216. At the lower end of where we clipped into during the month of December. That being said, the expected move for the company this week, let me just pull it up real quick. So the expected move for Amazon this week, and then I'll put it on the chart for you guys. We'll do this one together just so you see how I do these on the Sunday just to prep the week, right? So the expected move for Amazon this week is right down here. It is going to be about 2%, and the lower bound is about 224. So let's put a line right here at about 224. And you'll see 224 is a little bit high for me. It's below the support, but I want to get a little bit lower on Amazon, guys. Why? Well, because Amazon, we're still looking for a monthly higher low for further trend continuation. We are a little bit extended from the 12 EMA right now, but any meaningful pullback on Amazon will bring you close to the 12 EMA and get your monthly higher low for a possible rally. So I want to be buying any and all dips on Microsoft that I can as close as possible to 220 to 215. So that being said, pay special attention to this one early on the week on the Monday or Tuesday session, guys. If we can get a dip on Amazon, I will be a very big fan of buying. As a matter of fact, I did go in with one last week on the smaller contracts. So as we can see right here, guys, 225 is giving 0.5%, but below the expected move of 224 would be 222.5. It is not. You would have to see roughly $1.10 on this bid. We're not seeing it right now. Not a bad contract, but keep in mind, if you do see Amazon drop here Tuesday on the Tuesday session, because Monday's closed, Tuesday session back down here into 227, 226, 225, that is probably going to free up the 222.50s for the Friday close. That or the 220s, guys, as low as we can get for 0.5%. Very big fan of playing Amazon. And I played this one just last week, guys, AMZU. Same concept, right? We're looking very close to, if we can get $42, $43, $42 would not be opposed to building a position on AMZU, which is the 2 times leverage version of Amazon overall. Matter of fact, I do have one contract there myself. I'll show you guys in terms of where I fired it off. I think the AMZU contract is right here. 42 puts for 40 cents. We got those last week. This is directly from the Discord section where I call out all my the trades in real time, right? So that is play number 3. Play number 4 is going to be one that had a disastrous earnings last week, but that I still think is a fantastic company. Now, essentially what happened on earnings is they missed, and they give underwhelming guidance. But when you listen to the earnings call as to why they missed essentially is because the business has scaled so rapidly that they're kind of having a little bit of growing pains. The CEO was very disappointed in himself, took accountability right away for essentially just not delivering the expected results, right? It was one of the first quarters in recent memory that Trade Desk has actually missed on revenue guidance in quite some time. So he's already acknowledged a 15-step business plan that he's going to implement immediately to solve these issues in terms of growing pains, making the company more streamlined and efficient across its various lines of businesses. That being said, guys, the Trade Desk is a very, very solid company overall, and I'm looking forward to it. If you've been long-standing viewers of the channel, you might remember a time I was playing Trade Desk a whole lot back in the $80 to $70 range anytime I could find it. But it's since moved away from there. The valuation got a little bit high up here. But now the company, I mean, I was trading it back here in late 2023 a lot, guys. And since that time, this company has only increased revenue, increased profitability, increased EPS, and increased free cash flow. So we're getting the exact same price we had a year and a half ago, but with better fundamentals. So I'm a very big fan of playing this one. That being said, the expected move for the week is $76.09. You'll notice one thing here. This green line is the 200 weekly EMA. Very solid level, but also the favorite support zone that I've had on this chart for, I mean, a few years at this point in time, which is 72 roughly, all the way down to about 60 bucks. So we're coming down here on the weekly, extremely hot. You can see we are already weekly oversold conditions on the RSI. Right? Already weekly oversold conditions, and daily oversold conditions are very large as well. The daily RSI is down to 21. Decent buying opportunity to be writing short puts below the market, below the expected move. So let's go shopping on Trade Desk and see what do we have down there that we can go shopping for in the lower 70s. Full disclaimer, guys, I am already in this one as well. I'll show you the exact trade from my Discord directly, right? TTD, 75 put. I went 2 weeks out for 68 cents. Since I made that trade, it has actually come down a little bit more. So the pricing that you guys may get on this video may even be better than that trade, which is perfect, which is absolutely fine, right? I don't mind buying it here at 75, but if I can write another one down here in the lower 70s, I'll be even happier. So let's go see on the options chain real quick, shall we? So as we can see for this week at 75, there's not much there, right? The expected move is 76.09. We want to be below that as close as possible down here, $73, $72, right? So if Trade Desk has another red day to start off the week on the Tuesday session, you may get more premium at the 75s. Half of 75 is roughly 37. So that is how much money you need to see on this bid to take that trade. So pay special attention, guys. If Trade Desk has another 2-3% day to the downside on the Tuesday session, then for sure you will be able to find perhaps some premium 75, 74, who knows, maybe even $73. Get as close as possible into this support range and then let the stock kind of just find its local bottom. And the whole time, even if you get assigned, you'll be able to farm some premium with some very juicy covered calls on this fantastic company. There is nothing wrong with this business, guys. You know how Wall Street's been so picky with these tech companies, sending them down 5, 10, 15, 20% after earnings. Look at this EPS expansion. It's fine. Look at this revenue expansion. It's doing extremely well. The business is operating on full cylinders, just an earnings mishap. Gives us a great buying opportunity though. And the last company of all is going to be SoFi. So if you take a look here at SoFi, I've been talking about this one for weeks and weeks and weeks on the channel. Why? Because it's in a very nice area of support overall. Take a look. It is the bottom end of the range from 2021, $16 to $14. The bulls are still trying to play defense in that exact same area, trying to find a weekly higher low for possible further trend continuation, which also at the same time is, guys, we're trying to find monthly higher lows here. The stock ran up a ton November and December. Pullback consolidation, looking for a higher low, gaining some strength, and then looking for that momentum continuation. So if SoFi is a company that you like, also the valuation right now, even at $16, is quite good, guys. I have nothing bad to say about this company. They're growing revenue and EPS in a fantastic fashion. They are now profitable and have been profitable for the last 5-6 quarters in a row. So I do still love playing SoFi in these lower $15, $14, $13 ranges. For this week, the expected move is 15.08. So let us go see if we can find anything under $15 for some premium, shall we? So moving on to SoFi chain. So for this Friday session, as you will see, at $15, there is actually 8 cents. That is literally half of 8%. Half of 15 is roughly 7.5. As long as you're seeing 8 cents on the bid, not too bad of a trade at all. It gets even better though if SoFi for some which reason drops on the Tuesday session when the markets open back down into 15. Maybe you can find even better premium on the 15s. Maybe you can even find premium on the 14.5 strikes, which are not here right now, but I'll show you. Think as low as you can possibly get, guys. 14.5, 14, depending on how much SoFi moves, right? Be dynamic with your strikes. If SoFi opens 6, 7, 8%, who knows, to the downside, right? It's anything's possible, guys, right? And comes into 15 right away, well, then look even lower. Look at the $14 strike, as deep as you can possibly get into this support zone, which ends at about $14. So that is a trade on SoFi. I've been playing this one, guys, almost every single week for the arguably the last 2-3 months, and we've been having a very decent time so far. Valuation is good, company is solid, the level is solid on the technicals as well, and we're just not going too heavy, leaving some room to DCA to the downside in the event they want to pull back. And even the 13 areas, not going too heavy up here, not the correct strategy for that, right? If we're looking for upside, don't get greedy with the wheel, guys. The wheel is not a strategy for offense, it's a defense strategy, right? So that is everything, guys, for the top 5 options plays of the week. Hopefully you guys enjoyed that. Now, if you guys want some bonus plays, so let me give you some bonus plays real quick, yeah? So the thing about the bonus plays, why they don't make it into the top 5 is just because number 1, they're either not quite ready just yet, or number 2, they're a bit risky and they break a few of the strategy rules. They're a little bit too risky. Either they're in monthly downtrends, or perhaps they're just more volatile than the ones that I show you usually, or they're just not ready yet, right? They're just too high, and I'm waiting for them to come down into a level. So the first one of which is going to be Chipotle. Chipotle, nothing wrong with this company at all, has been trying to find a base of support. Chipotle, if you guys like this company, I've had a few people ask me, is it worth it to maybe play some short puts down here, 54 to 52 bucks? Yeah, not too bad at all. Very solid company, decent valuation. But I mean, guys, the reason it's not moving is they've ran up an absolute ton, right? The valuation is not the best right now. It is very high, even though the company's consistent. So I want to get beginning as low as possible, guys, as close to $50, which is the 26 EMA. Take a look at the 26 EMA on the monthly, guys. The CMG has never really lost it in the last roughly, 3-4 years of trading at this point. So we really want to be getting the best possible price. When a company is expensive like Chipotle is, you want to be getting the best possible price. And for me, that is like 52 down to about $50, all the way down there. So it's just not ready yet. It's a little bit too high, but if we see it pull back down, 55, 54, that is when those strikes do open up. I've played it a few times on these spikes below. These spikes down here, when we come down into it, right? I've played them a few times in the past, 54, 53s, but it only happens, guys, when we start pulling back into those lows. So pay attention. CMG, you might see this one on one of my future watch lists. Another one is Honeywell. Very solid company, very defensive company as well. Company has been largely range bound for the past, let's call it the last 2 years, right? The larger end of support down here is roughly, let's call it, 195 down to roughly 180. If I can see Honeywell come down into here, company's doing very well, I will be looking to write some short puts, but the implied volatility on this one is just not that high. You need to be somewhat close to the strike. So if I can see this one break down below 200 into 195 with more than it has right now, daily oversold conditions, I'll be a big fan of writing maybe the lower 190 strike, like 192.5, 190s could be a very decent trade into a very massive level of support for an extremely solid quality company as well. Another one could be something like Micron, right? Micron's been kind of barcoding between the resistance level up here and the lower end of our support range down there, which is 85 to roughly $80. If we see Micron once again have another leg to the downside, big fan of playing this one in the lower $80 range. Think 85 to 80 bucks. So it's not quite ready yet. I don't want to chase it up here into resistance, but if it comes down, I'm a big fan. Another one exactly like that is AMD. So AMD breaks a few of our rules, but the reason I like it, the valuation right now is just undeniably extremely cheap. It's trading at a 0.57 peg, which you do not see that often for a company growing revenue and EPS at double-digit clips for the next 3 whole years. But that being said, it does break some of my rules. It's a monthly downtrend, right? And the sentiment around the stock has just been extremely negative. I don't mind playing it at all, but I know some of you just may not like the stock overall. That being said, if I see AMD pull back down here into the high 100s, like 107, 106, let's call it, I'll be writing the 100 down to $95 strike puts and be very happy if I get assigned the shares or just looking to wheel these ones as a whole. Another one is NVIDIA. Now, NVIDIA has earnings in 2 weeks' time. We know they've put together a heck of a rally, but in the event that the bulls get a little bit tired and we roll over here like this and retest the lower end of this now recaptured support zone, right? Used to be resistance, now we closed above it, so now it is support. Well, in that case, guys, if we come down here, I'll be looking to write short puts on NVIDIA. 120, let's call it 120 down to 115. Love those areas. It's a bit too high right now. I don't want to keep chasing it and chasing it and chasing it to the upside, guys. No. Give me a pullback, and then I'll be writing down here in or around the 200 daily moving average, which is 122, 120-ish. So keep that one in mind. Another one like that is Bitcoin. Bitcoin as well has been doing absolutely nothing, right? Bitcoin, let me just pull up the chart real quick. My bad, guys. So Bitcoin has been doing absolutely nothing now for how many days in a row? Like 12, 14 days in a row. If we somehow get a breakdown, because now it is currently a daily downtrend, yeah? Daily downtrend, the bulls cannot get back above this resistance 101 up to about 98,000. If we break down to the lower end, I'll be looking to play short puts on BITX. The levels on BITX that I'll be looking out for are pretty much all the way down here. 44 down to about $40, right? But we need a big drop on Bitcoin. I'm not looking to play it here. If Bitcoin has a minus 3, 4, 5% day, comes back down into 92K, 91K, I'll be looking to play BITX. BITX 42 to about $38 is my personal sweet spot. Another one like that is Tesla. TSLL, I'll be using TSLL for it because it's a smaller contract. Tesla, you got to be a little bit cautious, right? Because it's a downtrend on everything right now. Daily downtrend, might just be looking for a lower high. If we get a retest of these lows and come down, Tesla for me, 315 down to about 290 is my desired target range to be writing Tesla. It's an area that the bulls have encountered as resistance for the past, and it should be an area that they use as support. Again, you see the 200 daily moving average is in there as well. And I think at that point, if Tesla really starts dropping hard, it'll come back down into daily oversold conditions. Could be a nice area of confluence maybe if we come down into there to write some short puts. For me on TSLL, that's synonymous with the $16 to $15 range all the way down there. If I can find some premium on 16 to 15, might be worth a little bit of a shot on Tesla 2 times leverage, but be careful with this one, guys. Be careful. And rule number one, as always, if you do not want to own the stock, do not write the contracts. Always remember that, guys, right? Do not force yourself to play something just because the premium is good. If you do not want to be assigned at the level you're writing, do not do the contract, okay? Another one is going to be Elf Beauty. Elf Beauty, same concept, breaks a few of my rules, right? Monthly downtrend, big downside momentum, got destroyed after earnings. That being said, I like the valuation. I like the company. I think their business model is good. We went through their earnings, and I was very confident on those earnings as well. That being said, down here, $65, guys, to about $50. If I can find some premium on Elf Beauty, 65 to $50. Big fan of writing down there. Valuation is ridiculously cheap as well. So any discount would be a welcome discount. I will still continue to play Elf Beauty. I don't think there's anything wrong with this company. I think they really just got hit in an unfair fashion, right? So that's Elf Beauty. And another one is Nike. Guys, I think for all intents and purposes, I think Nike is ready. I think it's time. After being down now for how many years in a row? Almost, 3 years, 3.5 years down in a row. I think it's time. They've acknowledged that they have an execution problem. They're taking steps to address the execution problem, going back to basics, innovation in the shoes, getting big contracts with athletes, big contracts with sports divisions, whether it's the NBA or, other sports divisions like that. They've let the CEO, the former CEO go. Now they have a new CEO. I think it's finally time, guys. We've been bottoming out here for how many months in a row? 6 months. I think it's finally time, right? I think the bears are absolutely exhausted. I think there's not many more people that are looking to sell the stock here. And, we're coming down into the 200. This green line is the 200 monthly moving average. How often do you hear me guys talk about that indicator? Not since 1997 have they spent more than a few months around this indicator before moving higher, right? So keep that in mind. I think we're ready on Nike right now. That being said, this whole area, guys, $71, $69. If you like Nike, if you want to give it a chance for a recovery story, I think now's the time. If we want to take some risk, it would be around these levels. I would be quite comfortable owning Nike around these levels. And so those are all pretty much the bonus plays and the top 5 options plays, guys. Hopefully you enjoyed that. If you did, consider dropping a like, would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these every single Sunday, even when I'm traveling, just to give you guys some prep for the week to come. Hopefully you enjoy them. If you do, consider dropping a subscribe. And lastly, if you have any questions on the strategy, guys, always feel free to leave them down below in the questions. Always here to help you guys out, try to master the strategy as a whole, because I think it's one of the best strategies that you can possibly run as long as you respect the rules on high quality companies that you do not mind owning at the strike prices. Always remember that. And in the event you guys want access to all my trades that I do live, yes, because even when I'm traveling, guys, I'm always trading live in the Discord Monday through Friday. If you want access to all these trades, here are all the trades since the inception of the Discord. Now, I do not only do the wheel trades, I also do directional plays like call options, call debit spreads, put credit spreads, leap call options, swing shares for larger positions or smaller positions using only shares. I do a lot of other strategies that I do not show on the channel, but we mainly do focus on the wheel. Here are all the trades since the inception of the Discord. I'm always very transparent. The green check marks are wins. Little red dots are small losses because I keep the wins big. I keep the losses small. That's how you really start growing an account properly. All the trades from the inception of the Discord, guys, they're all right here. I'll just scroll through them. So if you want to have access to all these trades, the link to the Discord is down below. We also do private morning live streams from Monday through Friday for about an hour and a half. You see me trade live. You can ask me all your questions live as well. If you cannot attend the live streams because you're working or something like that, they're always recorded. You can look at them after, or just ask me your questions in chat. I'll answer all your guys' questions all throughout the day. Very fast to answer your questions on your stocks, on your options as well. We have private videos that I put out as well that show advanced level strategies that I do not show on YouTube for small accounts, for very large accounts as well. Members have been finding tremendous value in these private videos. And we also, I also share all my charts. If you guys like my charts, my support, my resistance areas, and you just want to copy them with one click of a button, you can just do that. I share all my charts, all my watch lists, right, that I sometimes show on YouTube, all the watch lists, all the charts, and all the annotations as well. Whenever you guys see all these annotations on 100+ stocks from earnings or just my analysis on them, those all come easily clickable. You can copy them with a click of a button, right? So if any of that sounds good to you and so much more, the link to the Discord is always down below. Hopefully I see you in there soon. And if not, well, I guess I'll see you back on the channel, guys. Pleasure as always. Hopefully you had a good weekend. I'll see you tomorrow in the Monday market recap video. So take care. Have a good week, guys. That's it for me, and peace.